So we're going to kick the AMA off. It's going to be a hybrid discussion around the strategy. We're going to talk about process. We're going to talk about the current market condition. I don't want today to be such a deep dive on the entire mechanics of the strategy. We've filmed several prior AMAs, AGM, that are already available in the members area that really break down the foundation of the system. And
There's a bunch.
yeah, and they're already there. And so there's no sense on me repeating what's already been recorded. I'm gonna more of the lines just jump into doing it. And that way you can, I think people tend to see things kind of unfold as we do it. I'm gonna click on Striker Deliverables. I don't even know if I have an account to log in here. Give me a second. Let's try to log in and let's see. All right, so absolutely. So I'm going to just log in here and show you what we've got. So Striker deliverables, okay? So we've got all of this stuff, which is ultimately here. So strategy cheat sheets, chart templates, workspaces, desktops, and AI extraction guides. And these videos here are day 1, day 2, day 3, trading system. Like all of this stuff here is going to do everything that you need to be able to understand what I'm doing here this morning. And I'm going to start things off, and Jim's probably going to take over for the rest of the morning. I have another obligation. So the two of us are going to tag team this event. And yeah, let's just get into it. So disclaimer, can everybody do me a favor and just type a Y in the chat box so that you understand that I'm not here to give you advice, nor do I want that pressure. Please type a Y in the chat box. Let me know you understand the risks. Past performance never guarantees future results, and I have no outcome or bearing on your trades to your decisions, right? Education only. All right. I actually care about that a lot. I don't, there's a fine line between educating and advising people, and I'm not here to tell you what to do. I'm here to show you how you can do it, and how you choose to do it is your call, right? So, okay, let's get into it. Let's start with the charts. I've got volume and range tabs here. Why? I like to look at the market from two different lenses. Sometimes I get a clean setup on a volume chart. Sometimes I get a really clean setup on a range chart. When would you use the two? I think you just stick to the basics of like choosing which one you prefer over time. There's two different types of entry patterns you're going to learn in how you enter the trades. Before you focus on how you're entering the trades, you need to focus on where and why you're entering these trades. So we're going to get into the CME website. So if you go in and you just Google Quick Strike CME, and you just Google it right here, CME Quick Strike Options Pricing Tool. It's this bad boy here. And there's a free version, right? You can register for the free version, or you can pay for the paid version. I believe it's Bantix. I believe it's the more advanced version. And we're going to call it Bantix. We're going to go to here, Bantix Technology, see here. So the CME Striker is the free version, and the Bantix technology is just the free version on steroids, but I didn't see the real need to pay for it. I went through both of them, and for what we're doing, it's not necessary unless you're trading sophisticated option spreads and stuff like this. That like this is not necessary. So we're going to stick to the free version, eh? How you guys okay with that? Free is good, right? You don't need to pay for things that's not necessary, right? And trust me, it wasn't an easy decision. I had to literally go through both and assess if it was necessary or not, and determine the best output for this. And I've just determined that there's no need for paying things. Okay, so if we go to Quick Strike, we click. You log in, and you basically you're going to log in, and it's going to look like this. First time you log in, it's going to look like this. You're going to get a CAPTCHA. It's going to make you choose: are you a human being, or are you ChatGPT's brother? It's going to look like this. And this is where you could go down a rabbit hole and really get overwhelmed and say, what the hell? Why am I even looking at this shit? Because it doesn't even, I don't understand any of it. Like, what is it doing for me, right? As a futures day trader, looking at something like this gives me a headache. Why? Because none of it tells me how to trade, where to trade, what to trade, why I'm doing it. It's just a bunch of information that's all over the place, right? And this is where it took a lot of time to really determine how to do things and what the information is telling me. So a couple things here, you're going to see all these numbers here, like 2, 3, 4, 5, 6. These are the days to expiration. Okay. And the days to expiration are your options contracts on when they expire. We're just always going to click on the one that says 0 point whatever. We're never looking at anything past the 0. So you just always click on the 0. Okay. That's always going to give you your 0 DTE options. Okay. And you see, this is like a snapshot of everything. We're not really looking at all of this data. We're just going to be looking at the vol to vol. And you see here, it says options, quick options, vol to vol. I'm basically going to go up here and I'm just going to click on this tab here. You see this tab up here says options vol to vol. It's just going to give me a much bigger version of the same data. So I just don't want to look at a bunch of stuff that I'm not necessarily needing. I'm just looking at the options vol to vol. And I'm going to come down here to open interest. We're not looking at end of day. We're looking at open interest, and we're going to click on open interest. Okay, because that's the open interest of the of the contract, right? Which is really the most valuable thing that we're going to teach you here is open interest. Open interest on these option chains. What's really powerful about open interest on 0 DTE options is that it has a lot to do with what's going on today, right? If you just look at open interest alone on expirations that are going out several days, well, that shit can change, man. Like if open interest can change from today to tomorrow to tomorrow to like something can happen in some other country that changes the fundamentals of the market. The open interest that you look at today will be different than tomorrow. And that's why we don't put a lot of attention to open interest on outside of 0 DTE options, mainly due to the fact that we're day trading. Okay. Now, the key here is that we're going to look at 4 markets. I'm specifically looking at the NASDAQ, crude oil, gold, and the Russell. Why? They're independent markets. They have different relationships, different behaviors. And the goal here is you could look at any market you want. You can go here to any market you want. Ags, crypto, currency futures. You could look at energy futures, indexes, Forex futures, everything that's on the CME website you can. For this example, I'm going to look at the equity indexes. I'm going to go to the Russell first. We're going to do the Russell. Okay, good old Russell. Why? Because it's a little bit easier to read. You're going to look here. You're going to see that there's less strike prices. Well, let's break this down a little bit. Let me grab a cursor here. Now, okay. So the biggest thing here is you want to make sure that you're always looking at, okay, you're going to change the color. You're looking at 0 DTE options. You need to make sure it's at the 0. If you're not on that 0 DTE, you're on the wrong contract. It's very easy to be on the wrong contract. You could click on any of these things and you'll be on the wrong contract. So just make sure you're always looking at hovering over. It says 0.31 DTE, days to expiration. Just make sure you're always on the right contract. It's right here. Now, this is important. We're not going to look at the strike prices. The strike prices are down here, right? These are strike prices. Before we do that, I want you to understand the livelihood of statistics. Mathematics plays a big role in what we're doing. And I want to make sure you understand the edge around standard deviation. So this is current price, right? This is current price. So we're at this strike price right now. I believe so. Jim, can you verify we're at that?
Yeah, we are at M2K. It's about 23.90. Yeah.
Yeah, 23.90. So we're here. So you see the different shades of gray here? Shades of gray. Yeah, right there. 1, 2, 3. 1, 2, 3. Okay. And this is really the bell curve. How many of you guys are familiar with standard deviation and statistical analysis? Yes? Okay. As you go to 1, 2, 3 standard deviations, yes? The probability of the market going past 3 standard deviations is not so good. So let me explain this. If I click on this right here, I'm going to click on it. 3 standard deviations. At the current volatility level of 26.19, the underlying future price at expiration is expected to be in the range of 22.36 to 22.45.50, 45.89. 99.7% of the time. Which means there is a 99.7% chance the market's not going past this strike price. Let's just put that at 99.7. That's freaking important. Okay. Now, the next one. Let's go to the next strike price down here. Let's go to this one here. At the current volatility, why does it always say the current volatility? This is very important to understand this. There's this little line here, this little, that's your volatility skew of the option contract. Now, I'm not, trust me, there's, you don't need to be an options trader to really make sense of this, but I'm just going to kind of build some trust around why we're looking at this information. It says at the current volatility, based off the option contract, this volatility skew of what's going on, okay, the underlying price of the expiration is expected to be in the range of this to this. So 24.27 right here, right there. 95% of the time. There is a 95% level of certainty, okay, that the market's not going past that today. That's pretty damn solid, right? You have a 95% chance of not going past this brick wall today. Wow. Pretty important information. Okay, we're going to go into this in more detail, okay? Let's just go down here and just go to this one, okay? There's a 95% chance that the market will not go past 24.27. 23.54 to 24.27. So 23.54 right here. 95% chance it's not going past this level. Okay. Does this make sense to you guys? This is very important information because there's very valuable data points right here that we're going to talk about. That's the institution's goal. Keep it between this wall and this wall today. Now, if we're here, this is really important to understand here. If we're here, there's not a lot of stuff going on here. There's this, and that's it. And if we're here, the market could trend this way, have a huge reversal, come back, could trend this way, could come back here, or it could trend this way and come back here. This is what the market's telling me. And you can't even see that on a chart. But what's important is that by understanding these are really big walls in the market stacked by standard deviation probabilities, okay, there's a big difference between trading a reversal diddling in the middle versus trading reversals at the shit that matters. Now, you might catch a bounce play, you might catch a little scalp and, you know, muck around. I challenge you to get a hold of your emotions a little bit, in that your reversals are meant to be traded where reversals are meant to be traded. Trends are meant to be traded where trends are meant to be traded. And I stand by that because so many traders flip-flop all the time. Oh, I'm going to trade a trend. Oh, I'm going to trade a reversal. What is the definition of a reversal? What is the definition of a reversal, right? That's the key. Like, reversals are meant to do, like, if I know that the level's here and the level's here, because this is at three standard deviations, there's a much higher probability of a bigger rotation coming from the edge of the bell curve than in the middle. Now, does that mean that if I've got two standard deviations here, that I won't get a reversal here? No, it just, the probability of the larger rotations drops. And this is where you have to make a decision. If I'm sitting here as a trader, doesn't matter where I am in the market, because we're not even looking at a chart. I'm using statistical data to depict how traders should be looking at the market. If I know that there's a 99.9% or a 99.7% chance the market's not going past here today, that's probably the best place for the biggest reversal. Okay. There's also a 95% chance that the market's not going past here today. So if that's the case, I could look at playing reversals here and here only, because you have to be able to play, right? Like it's like poker. Sometimes you put the little blind in to see the hand on the big blind. You got to pay a little bit and you just lose the blinds, right? Like you might catch a stop out once in a while on the 2 standard deviation to get the big reversal on the 3. And then that becomes a discussion around risk versus reward, right? Whether you have one win and one, you have 2 trades, one's a win, one's a loss, but your other trade is a bigger win, right? That's how you make money over probability. You can't not try to trade a reversal on 2 standard deviations. You'd be losing out on opportunity if the market's going to rotate within the 2nd standard deviation, right? However, you also can play the factor of trading the trend to this level. You can play it both ways. And this is where it goes down to this. You might catch a reversal or you catch a trend. You can play both sides of it, and it all boils down to entry patterns, because the market's going to tell you how it's behaving at those rotations. So you can play trends all the way to the 3rd standard deviation or to the 2nd, or you can trade reversals at the 2nd and 3rd. And this is how you position a trading plan every single day. This is why I always had a lot more winning trades doing this than, because I didn't change the way I would do it. If I don't get the setup, I don't get the setup. I just don't take the trade. And the key here is that I like to look at thinner markets. Let me explain this. Crude's a thin market, gold's a thin market, Russell's a thin market, NASDAQ's a thick market. What's the difference between a thin and a thick market? Easier data to assess based on institutional options. You'll have a higher probability of trading gold, crude, the Russell, and thin markets over the strike data, because you'll be able to make sense of that information a lot easier. Does that make sense? So we're going to plan the indices last. You say, holy shit, most people want to trade the indices. Yeah, but we'll take a look. I'll give you an example why. Take a look at how easy this graph looks. It's clean, it's clear. I can see these big spikes. We haven't talked about those spikes yet, and we will in a minute. Versus this. Let's go to the NQ. A lot more data to assess, a lot more points of interest, right? A lot more spikes. Let's take a look at the S&P. Like, holy moly, like, how do you make sense of these? It's like there's spikes everywhere. Okay. Now there's a clear spike. There's some big ones in here. Okay. But I like clean, clear, like, you could go into the energy market, take a look at crude oil. Very clean. 1, 2, 3, 4 spikes. And on 70 is the bigger spike. So why are we doing this? Because I like to be able to teach you easier things to look at. We'll go to the difficult later. Are you guys okay with learning the easier ones first, and then we can bridge onto more difficult stuff after? Okay. Now, let's go in and let's plan Russell. Okay. So I ultimately started doing this by hand. I'm going to do it by hand with you first. Okay, so let's go here. Let's do it like that. Can everybody see that? Okay. So does everybody understand my discussion on open interest and standard deviation? Make sense? Do you know the biggest problem everyone's going to have? Jim, I seen you do it, me do it, everybody does it. We all fucking do it. You know what the big problem is? One day I want to trade a reversal. Next day I want to trade the trend. The mind is the devil. I tell you that right now. The brain plays tricks on us because every day is different. One day the trend works, one day the reversal works. One day the reversal works, the next day the trend works. It's just the human nature of, like, the market, right? You know what never changes for me? Standard deviation, mathematics, right? And I'll tell you a story, and this really always set well with me. is that by nature, the markets want to stay within balance most of the time. Most people see these really big trending days as, wow, the market's trending today. Yes. But that happens like 20 to 30% of the time. Markets don't really do big, strong trends less than 20, 30% of the time, which means by most definitions, the markets want to stay in a mathematical context. And so if that makes sense, the 70% of the time, the bell curve is going to hold reversals at standard deviations more effectively. I learned this from a market profile trader, actually, because I've seen him trade for years and I've never seen anybody else trade like that. And that's when I really started putting a lot of emphasis on statistics in the market. And then when I bridged it into this, I was like, holy shit, like this is exactly why the markets are doing exactly what they're doing. And I'm going to tell you right now, the first thing you need to do as a trader is look at the biggest spikes. That is like your biggest spikes. You need to do that. Now, let's talk about calls and puts. If we're at current price, I'm going to just draw a little line here. Current price is, what is that? That's 23.90. Okay, there's current price. Love it. 23.90. So 23.90 is here. That's current price. Changes to a solid. So at 23.90, anything below that is here. Anything above that is here. Make sense? Now, when we look at this, we need to understand what is resistance and what is support. Puts are orange. Okay. We look at orange puts below price. We look at blue is calls above price. Now, we're not going to get into options because that's reversed, right? Puts and calls. You got to remember, institutions are selling puts to hedge the bets. They're selling puts. They're not buying puts. They're selling puts to hedge the market. Okay. If you're buying a put, you're normally bearish. But if you're selling puts, you're bullish. You got to think like the institution here. Now, I don't want you to think like an options trader. I don't care about this. Just think colors, guys. Like that's why I say simplify this. You don't need to know how the engine is built to know that a Porsche drives like a mean machine. You know it's expensive because it's a Porsche. Okay. Orange is support. Blue is resistance. Does everybody understand that? Give me a yes. Clean as day. We don't need to go into the reason behind it. We want to get into option stuff. We'll look at the theory cheat sheets after, not today. So what I'm going to do is I'm going to look for the biggest spike of orange below price. The biggest spike. That is the biggest one. I'm going to look at it here. 23.70. Cool. Bring it down, baby. 23.70. That is the biggest spike. The biggest spike is here. Guess what this is? That's the one that's the big bad boy. We're going to make it stand out a bit. I know that's the big one. Okay. Now we're going to go up here and we're going to look for the biggest resistance. Okay. Down here, 24.25. I'm going to just copy this one because it's the big boy. 24.25. Right there. That's my resistance wall, and that's my big boy here. Now there's another one down here. You see this big blue spike here? You say, well, why the hell is resistance below price down here? And the answer is we don't really know. They're probably selling out of the money calls to make premiums on the option, or they're hedging something unique down here, but it's the same strike. So we're going to pay attention to this. Normally, this is what threw me off for a while. And I just stopped really thinking about like the why behind it and just understanding that that's just a ton of open interest. So I don't care, but I'm really more concerned about the orange here, but that's still got that's the second biggest orange. You see that? It's just the put to call ratio is different. And it's still the same strike price. It's still the same strike. Okay. So this is really important to understand to be able to see that. And I'm just going to leave it at that. Now I've mapped out the big ones. Okay. 2370s here. We can do 2350. There's a 99.7% chance that it's not going here. So that's the important part, right? And this one here is 2430, which is right here. These are the big ones. These are the giant walls. Okay. And like that. Okay. Does everybody understand what I just did to the Russell? Now, we're going to go and we're going to map out the other ones. You see here, there's nothing here. Nothing here. If for something happens, let's say an interest rate decision, or there was news today. Is there news today? I don't know. Let's take a look at forexfactory.com. Today, unemployment change in Canada, consumer sentiment, yeah, could move the market. Anything could move the market. We never know what the institutions are thinking about that fundamental. It could be bullish, and then all of a sudden it does something bearish. Who cares? Just know that it's happening. All that matters is there is news. How the market responds to that, the market will tell you that. Never have an opinion on the news, have an opinion on the time. Okay. Now, if we come in here, let's do the next one. The next one is at 2400. Well, you can already see that the market's respected that level. Where did they stop it in the overnight? Okay. They stopped it at 2400 right here, which if you look at the ratio here, if you zoom in, you just zoom in with your mouse. Okay. If you zoom in with your mouse, you can see that. I'm going to just maximize that a little bit. If you zoom out, it doesn't look that big, but if you zoom in a little bit, just start zooming in, it looks a bit bigger, right? So zoom in with your mouse and you can actually see some things that are quite valuable here. Okay. And this is important to be able to see that because it doesn't look to the naked eye. It doesn't look like a big wall, but you zoom in on that scale and it's actually pretty significant. Okay. It's pretty significant. Now, knowing that this is the big kahuna, this is the second big kahuna. Let's go down here and start talking a little bit about this picture here. Okay. Let's click on here. There's a 70% chance that the market's going to stay here today. 70% chance. That's the value area of the market, okay, of the option contract. And so when we look at this, if the market breaks below here at 2390, which it's got a floor of support, where's it going to fill the orders of the institutions? Open interest means that's where they want to do business. Open interest says this is the prices, and this is the whole point about the difference between looking at the market from a volume profile perspective versus an open interest perspective. Open interest tells where the institutions are going to exchange their hedge contracts. They have to exit the hedges. They have to close their options contracts. Volume profile doesn't tell you if anybody's doing anything. It just tells you there's volume there, okay, from the past. Open interest tells us that they have an open interest to do business there. They're actively going to execute trade there. That's the difference between volume profile and open interest on options contracts. Volume just shows us what happened in the past. Open interest tells us what they want to do if we get there. Very different, valuable information. Wouldn't you say that? Yes or no? Volume is past. Open interest is the future intent of what they're intending to do on the contract. And it's because it's a zero DTE, they have to do it today. Yeah, pretty freaking important, right? Definitely not retail data. Now, let's go in here and draw some lines. That's a pretty big level. And it's before the standard deviation. For me personally, I would love to trade this as a trend trade. Why? I don't want to fade something that's already been there before. Could it work? It might go here and drop. Yeah, I don't care what it could do. This is the challenge that I have for you. Everybody in here, everybody. I challenge you, okay? I challenge you to think like somebody that has an understanding of the bell curve. If there's a 70% chance the market's going to stay in here, where do you think the biggest money is going to be made? When the market gets to the extremes or trading from the extremes? The biggest money in the industry will be made going to the extremes and then trading from the extremes. So what we need to be aware of is if we know that the extremes are up here, and we know there's nothing stopping price in here, I would rather trade this to the extreme, taking targets along the way. And that's the smiley face. Does this make sense to you? This is the game plan between trading trends and reversals and not trying to deviate from that all the time. If you see this all spiked in here, boom, boom, walls, yeah, they're going to be chopping that back and forth very tight. If you see space, movement, you have space for movement. Even my dog's barking. He says, yep, you're on to something. Okay. So I will look to trade this as a trend if I get up here because it's in the middle. And I want to see it trade the outside of that. Now, I might miss a trade. Okay. And I'm okay with that because my plan is to understand the mathematics behind the data more effectively. Okay. Now, what I would like to do is understand that I want to talk about this side of the market now. Okay. If I zoom in, you can see there's nothing here. So these are targets. These are tiny, tiny targets to me. So let's put them in here. They're thin lines. Now, a couple things I want to talk about. If the market gets above here, that doesn't mean this won't be the big reversal for the day. I have no way of knowing that. Nobody knows. Nobody knows what's going to happen, but the data says otherwise. But I know that there is business to be done here, just a small amount. And if this wall is right here, and everybody sees that wall here, guess what? This may be where everybody says, fuck it, I'm out, bails, and we don't get to the wall. Right? Think about that. If I'm here, trending, boom, peeling off, getting here, and all of a sudden it just goes like this, poof. That could very well happen too, because they may not want to get to the hedge. They may say, no, we're blocking the trades. They're not going here. They bail here. We don't know this. And this is the difference between having a crystal ball. We don't need to know this. We need to know that that is the extreme and this is the middle. And why would we want to trade a huge reversal here? I will wait for the market to show me if we get above it. If we can't get above it, then I just don't participate here. Do you understand? Like, this is something you need to be thinking about. Because if I get above this, I can take profits here. I can take profits here. If I go here and it just drops, well, I still made money. That's the key, is understanding you're not wrong. It's just the market's going to do what it's doing, but you have a roadmap for the day. You don't have indicators here. You don't have freaking other stuff that's like, this is data that's valuable. Let's go into this. Let's do the bottom side now. Now, this is a pretty heavy piece of information here. It's a really big wall. A lot of support is here. A lot of information to be here, which means they most likely are going to not want to try to go past this, or they're going to offload a ton of market here. They're going to offload a ton of business here. Why? Well, if they're short from up here and they're peeling off, there's a very good chance the market could trend back down to these data points, right? And that's the point of understanding where the support is in the business. And I don't know about you, but are we trending down right here? Yes. So, if we get to an opportunity, if we see that they're going to try to, if they're short from here, which they are, people were short from here. You can see up here, they got short up here. Okay. And that's where all the bigger liquidity is. If they're here to here, and we're sitting here, wouldn't this be a good short if we break below it? Boom, boom, get below it, see the entry pattern, and trade to support. Kind of makes sense to me. Just like that. And we've already got that. All right. Gotta love it. Give me a second, guys. Just gonna load this back up. I'm testing beta builds, so it might hopefully it drawing stayed there. One second here. Such is life. Life happens. You don't let it bother you. Data is loading here. Give it a second. It's got to load the platform again, guys. Might have to replot my levels. Yeah. It's okay. That's how you do it. Do it fast. It's good to do it, though. Come in here. Grab the levels. So let's go in here, 2070. Boom here. Just going to plot lines here. Okay. And give me a second. I got to take screenshots for the guys on this because we're just getting ready. Okay. So let's get in here. Hit close. It's not letting me do it. All right. Apologize, guys, on that. Just got a bug here.
Seems to always just be the range charts. I never really have issues with plotting them on the volume charts.
Thanks, Jim. Appreciate it.
Yeah.
Give me a second. I'm going to bring John in here. I'm just going to bring him in, guys. I just want to show my developers here so they can fix this. As you guys know, I need the link here. All right. It's good when you can reproduce it because then you can fix it, right? Appreciate your patience, guys. Just going to make sure that, and we'll get the levels. The whole point is, are you learning something from this information? I promise you it's not your first situation that's going to happen. And yeah, it could be, and it's happening all the time. A second here. John's just coming in. Yeah, Francis, appreciate it. I just want to make sure my developers see this before I move forward. Yeah, the light bulb. Yeah. I'm going to bring him over here. Let me just see here. I think he's here. Okay, so what I'm going to do is I'm just going to close this, John. So when I click on this and it's, whenever I draw the drawings here, John, it's just, it just keeps popping up, and whenever I move it, and it just, so it's, and when I clicked on the chart earlier, it just locked up and crashed on me. Yeah, no, this is not a sales webinar, John. This is an education. So it crashed on me twice, doing the same thing, just clicking on a chart and it randomly crashed. And then the pop-ups, John, if you go back and you see like I'll just randomly place drawing tools and it'll just start giving me a headache. Yeah. Not now. There it is. Yeah. Yeah. And it's not just the horizontal line. It happens on just drawing tools. And every time I right click, it's, so I'll go to the volume charts here and let's see if that changes anything. It's happening on range charts. Okay, guys, so let's redo all the levels here. I know that's kind of an unfortunate reality, but yeah, we'll get back into it and just reassess it. So I'm going to go and plot all the levels again. At 24.25 is where the big ones are. And 24.25, let's go in here. So 24.30, 24.30. And this is the 24, let's see here, 24.25. That's the puts, and then 23.50 is the big ones. Okay. So let's go through it. Right here's it's just happening on everything. Let's keep going here and let's pull out it again. And let's go here at the big one is 23.50. It's that one there. Wow, it's not even letting me do anything now. Okay, 23.50. And the next one is 24.30, which is up here. John, you still in the class here? So make sure you're seeing this. I'm going to install a different version, guys. If you could give me a second, I'm just going to reinstall a different version here because I just want to take a second. You guys okay with that? I apologize for the inconvenience. I'm just going to install the other version of TickBlaze on the computer because I have a different build and I just need to revert back to a different build. It'll take me 2 seconds. Thanks. Appreciate that, guys. Coffee refill. Exactly, Michael. Appreciate the patience. Yeah, never a dull moment. Bear with me, guys. Okay. John, you here? Which build? Which build was the prior build that I had? This was 97. I'm going to back up the resources as well. I'm going to, actually, no, I have it already. It's a TickBlaze backup. Yeah, your answers are showing, Ed. Yeah, appreciate it. You can use any platform. Yeah. Give me 1 second, guys. I'm just going to go download the other version, guys. Appreciate your patience on this. What you have it going, he said, no worries. What you have going is awesome. Yeah. All right. Let's try downloading 87. I believe it was a little bit of a better build here. There we go. For me. Yeah, you'll get a recording, no problem. I'm going to cancel this and do a clean install. So let's do this. I'm going to show you guys how to do a clean install real quick here. This will be good to learn. Very important. Let's go to TickBlaze 2. I like to just delete everything, do a clean install. It's normally how we instruct everybody to do that. Come in here. I just I'm just going to import resources, guys. I have workspaces built. I don't got to redo my work. Get rid of that. All right. Let's try to reset this over here, guys. I'm just going to start from scratch. The good thing is that this is the whole joy of an AMA is I teach you how to do it, and that way you guys can do it. Delete that out. Load the workspace that I have right there. And let's try it again. John, just so you understand, I'm going to be operating on build. You still here, John? I'm going to be operating on, that's 97 that I just installed a different build. All right. I guess I pressed the wrong button. 87. Interesting. Give it a second here. I thought I installed the prior build. How to add Arc algos templates, ArcAI. Yeah, Robert, we're bringing the algo engine in. I'm going to try one last time on this install, guys, and then I'm going to revert to a different build. I'm going to try it one last time on this, and I appreciate the patience. That's why it's still in beta. It allows me to iron out the bugs, James. Appreciate it. Yeah, that's why our team's on standby. It's pretty nice to have your team just come in on the fly like that, be able to see it. We can fix it, right? And that's how you make software amazing. You know, if you ever had an iPhone or a Samsung, you know, there's a reason why there's version 18, right? Like it's, we get through it. I'm going to try and if you have a job worth doing, it's worth doing twice, Tony. Appreciate it. I appreciate the patience. It's not always easy for me to be trying to teach and something like that happens, but I'll do my best to kind of regroup here. Let's try to draw on the chart here one last time, and if not, I'll revert to a different build. No, okay. I'm gonna go back here. 1 second, guys. Appreciate it. I'm going to close out the workspaces. I'm going to just build a new chart for a second. Maybe it's the workspace that got corrupted. I just want to see here. Happens to the best of us. Okay. Interesting. I'm going to turn this to a range chart. 1 second. I just want to try it one last time, guys, here before I decide to go back to a different version. And we'll spend more time today here, guys. We'll make sure we spend more time on the training and all that stuff. Yeah. Okay, I'm just going to try one chart here. I just want to see if it does it, and then that way I know if I want to install the other version. Well, it doesn't seem to be doing it here on a fresh chart, which is a good sign. Might be the workspace, John, is corrupted when it does that. So maybe we'll build a new workspace and you got it. You found it. John found the bug. Well, that's a good sign, right? That means nobody else has to suffer from that as long as I'm the punching bag. Hey, we have a win. I'm going to just create a quick new workspace here, guys, one at a time, and we'll do it together. Yeah. Well, that's why I'm here, right? I would rather take the grunt of it and get you guys off to the races. And I'm just going to build out a new layout here real quick, guys. Let's do crude oil. You guys okay with the fact that, you know, once in a while a speed bump happens? Hey, you never know. I promise you I'll teach you all my secrets if you just give me a mulligan on this. Let's go here to drawings and remove all drawings. And we'll just bring it up. All right, one more two here. I'm going to grab another chart and we're going to bring it into GC and bring it onto a single contract. I'll put this down to 1 day of data. Bring it down to range. We're going to go to a 10-tick range bar. And there we go. Bring this down. Templates, really easy to build things out in tick plays. Like we've really structured it in a way where, you know, something happens within a very short period of time. We're back up and running, right? Okay, and let's bring that back down to 1 day. Absolutely. Yeah, absolutely. And we'll do one more chart of the NQ, MNQ. That's why I build chart templates. Helps me build things really quickly, right? And it really helps a lot. Fast, makes things so fast, like within literally, you know, you can have things running and rolling, right? 50 ticks. Fantastic. Takes a second to load the NASDAQ. Okay. So we're back on track here, guys. You know, it's nothing like a little bit of a, hey, give me a thumbs up that I recovered that pretty fast. I just need a new coffee. So you guys with me? All right, let's get back into the groove here and let's draw here and let's find the strike prices. Where the hell did they go? There they go, and there they go. So let's go back in here and try to draw on the chart. Fingers crossed this works now. And 2430, we're up here at the top, 2430. Okay, down here at the bottom, 2350. Okay, let's zoom in a little bit. Let's get those bigger strikes in here. 24. It changes to a solid, so that way we're good. And bring it back. 24, and we're at current price at 2390. 2390 doesn't really have a huge amount of anything, right? It's just this. And so I personally think that like 2390 is just where we're at as current price, but I don't see 2390 as a level, right? Like I know we had a line there because that was current price, but that doesn't mean it was a level. Like that's just where we're at. 2380 is a level, right? These things are levels. So let's bring that down. Let's bring that down to 2380. And this is a strike price of 2375. And 2390 is where we're at. Like it's just this little blip, but it's not really wow. Like it's not something that's incredible. 2400 is a big wall, and I would arguably think that as a trend, right, as a trend trade to the short side, if we wanted to trade it short, we can wait for it to come back down. If it broke back above it, we trade up a lot, but we pay attention to the entry pattern here. That's the key, right? That's really the key. These are the walls, and the 2370 is the big bad boy. 2370 is here, and the other one is here at 2350. So let's zoom in, and 2370 is the big one. Okay. So if I look at this, right, 24, if I come back down here now and I zoom in over here, like these are not, like they're very small, 24, like it's they're insignificant to this. And because the scale is so big, like if you zoom in, you know, it's not like they're very small, right? So let's make it bigger so you can see it. So you can just actually see if I zoom in, they're really not that big. Like they, you know, unless you zoom super in, but that's not how you gauge relevance to the rest of the strikes. And so that's why if you zoom in a little bit, you can see, okay, that's the data, right? So at the market open at, you know, we might see some movement here coming in. I would really like to play 2,400 as a level. If we break above 2,400 to the upside, remember 2,410, these are targets. Remember, those are targets. I like to always just separate them, just my own, you know, I just like to make them bigger if I know that it's actually a bigger level. And that's just for me for visuals, because you see a bunch of lines on your chart and you're saying, okay, what are those lines telling me? I know that bigger levels are bigger levels. Does that make sense, guys? So we'll wait and we'll pay attention to what happens at these levels and we'll watch them. Okay. But there's a very good chance the market could trend all the way down to 2380. And remember, as a reversal trader, reversals at the edges of the standard deviations are where the big opportunities are. This is a standard deviation edge. This is a standard deviation edge. That's where the big rotations can happen. So if we're here, we're sitting here, the market could very well drop to here. Okay. But that's not the strategy. Like for me to say, oh, I'm just going to short it because like maybe it'll drop. Like that's not how we trade these. We have ways in which we trade these levels. And if I'm going to enter a reversal here to the short side, or I'm going to trade a trend trade to the long side, the market needs to come up and I need to see it cross here. Or the market needs to come up, I need to come down and cross here. I want to see my EMAs crossing in those environments to give me some evidence that the market's actually going to do something. So market open just happened. Maybe the market's going to trend. Maybe it won't. Small day, Friday. Okay, but we're going to watch the market and we're going to see what happens. Now let's go back and let's do another market. Remember, I'm not looking at the NASDAQ as my primary today. They're harder markets. So, and I don't think we're going to get a lot of movement until 10 o'clock. Like realistically, that's the fundamentals that matter today. Like this is the fundamental catalyst that will move the market. So everything's going to wait and we might have a quiet open. So I'm going to move over here and let's take a look at gold and let's take a look at these other markets, right? Let's take a look at gold. So I like to right click the tab, go to duplicate, come up here, find my drop down, go to metals, go to gold. First thing I check, am I on open interest? Am I on 0 DTO options? Okay, 0.17, yes. Bring it there. And I think that's gold. Yeah, that's the gold chart right there. Ed said that was my problem. I needed to change my way of thinking. Isn't that the truth to everything in life? Right? So we might have missed a big trade here. We don't know this yet, but let's take a look at what's going on the gold market. Okay, this is gold open interest. And yeah, let's take a look at how we're participating. I'm going to basically look at the big spikes above. The biggest spike above is here at 27.50. 27.10, we got a huge rotation here. To me, looking at this data, we're here. Okay. And, you know, to me, this is, people get confused. They see stuff happening and they're okay, I'm at 27.10, right? And they see that the market is rotating here. Okay. So what? We need to pay attention to what we talked about earlier. Big spike, big spike, big spike at the edge of the standard deviations. 2,700 is a massive level. Holy moly, that's a massive level. Let's get that on the chart quickly. Yeah, that's the biggest one of the day. As a trending market to the upside, which it is, I'm going to be looking to go long off that level. Why? Because it makes sense to do so. It's the biggest one. Same thing here, 2690. $26.27, 2690s here. That's the big kahuna. 2690. There's nothing in between. Not really interested in that. And then the next one down here is 2675 and 2670. Market's probably not going to get there at all today. But that's the likelihood of it going there. 2675 and 2670. Makes sense. When it's that big, Michael, when it's the biggest level of the day, I pay attention to it no matter where it is. But in all essence, you're not wrong for saying that. Michael's asking he's like, because it's still within one standard deviation. Yeah, it could very well break through here to hit 2690. But you don't know that. Nobody knows that. And you have to think, yeah, we can, Peter. I'm just teaching you how to fish first before you fast track your skill. You could easily use ChatGPT. Watch this. I'll show you. This is in the videos. Peter, great question. I like to look at the levels and make sense of it myself, just because I like to know that I can understand what it's telling me. But ChatGPT is definitely a very fast way to do this. Let me show you this. Okay. I go in here, ChatGPT. And I say, okay, I'm going to upload an image from the CME Futures website that shows the open interest and standard deviations for 0 DTE options contracts on futures. Please rank the strike prices for support and resistance from strongest to weakest. Separate support and resistance into 2 different lists. Don't skip strikes. Current price is, and let's take a look at, current price is, let's go in here to 2408, 2408, and we're looking at the GC Gold Futures contract. So all I'm doing is I'm just taking what I've just done manually and telling ChatGPT to fast track this by giving me I'm going to give it an image. Okay, so I'm going to go in here and I'm going to take a picture of this using I have Snagit. I use Snagit. I'm just going to take a screenshot of this. Actually, before I do that, I want to zoom out, make sure I'm not missing anything. Okay, just like that. I just right click, copy that, and I put it into ChatGPT. Here is the image. Okay. Tell me the strongest to weakest support below price and resistance above price. All right. 20 so oh yeah, my mistake. 2704. Yeah, that's my mistake. Yeah. It already found the error. I made the mistake, but that's how ChatGPT is. It found the error. It told me, Sean, you're wrong, right? You had a typo, bud. You get it? You see what I'm saying now? Let's take a look at this for a second. It's basically, now tell me which is the strongest and weakest. Rank them. There you go. Separate into support list and resistance list. Support level. There we go. This is how you do it. It just tells you strongest support, 27. Moderate support, 2685. So it's not even picking up the 2690 level, right? So let me take a look at the image, 2690. It didn't even pick it up, right? And, you know, I'm going to ask it, why did you skip 2690 level? I'll ask it, why did you mix it? You're absolutely right. I overlooked that level. Right. So you gotta remember, it's a computer. It's not you. This is one of the reasons why I like to look at the picture first. And you can do that, but there's a roadmap for you to plot your levels too, right? You could, moderate support is 2685, weaker support, weakest support, right? The strongest support is here, here, and here. But we can see that on the image. We can see that on the image. Tom Rasaki says, wow, you see what, how many guys, you see what I just said? I integrated ChatGPT. I took a screenshot of the data. I uploaded it into the data, and it just basically tells me what the data is telling me. Because a lot of people don't understand the data. Pretty cool, huh? So I can come in here and I can basically say, okay, we know those are the two stronger bad boys, but these are down here at the extreme. So they're still pretty strong in my opinion. All right, let's take a look. Where are we here? Still doing nothing. Yeah. So remember what we said, we're going to watch to see what the markets are going to do at these levels. Just sitting there sideways, waiting for that fundamental data to come out at 10 o'clock. And yeah, so how we participate on this level is critical, like how we're going to execute on this level. I don't like to fade it. I know, Jim, you have your own strategy on looking at volume as it's coming into the market, right? And everybody has their own little flavor of, you know, the key is that I have my way of doing it. If the market came here and hit this level and then it just basically shot straight up and gave me a crossover up here, I wouldn't take that trade. I just don't do that. I actually want the market to come into the level, and I want to see the crossover happening at or around the level, because that tells me that it's normally a much better rotation. I see better trades that way. I have a better way of assessing the liquidity, executing in those areas. There's been times where the market will come down and just spike. And you know what? That just tells me that these levels are amazing. If I don't get the entry pattern that I want, I don't take the trade. Why? Because my job is to put on risk. My job is not to know everything all the time. And I know the levels matter because it's information that the institutions are showing me that they matter. How the market responds in here, I don't know. And, you know, this is important. Does that make sense? Now, I think personally, ChatGPT is a great asset. I think realistically, okay, you ultimately need to get good first of seeing the spikes. Like, look at that. You can see them. Those are your areas. Boom, 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 boom. Another thing too, if we get below this level, right, and we trade below it, trend trade to the reversal. If we come here and we reverse off of it, reversal, right? Like there's two different ways to play these. Broken support becomes new resistance, right? If this failed here, like if we cleared below this and we didn't give a rotation here and we came down here, boom, and we came to the middle, we came up and it gave a rotation here, I would trade that short because I'm in the middle of the mean and I'm going to the extreme. You understand me? So I have two trade plans on every level. That's the way I trade these levels. I basically will look at, should I be trading this support? Yes. But if the strongest support level fails for the day, guess what? That's pretty damn good resistance, wouldn't you say? Broken support becomes new resistance because support once fails becomes resistance until otherwise. And we're not drawing trend lines in some freaking, oh, there's an order block. Oh, I think this low has the liquidity. Yeah, that's us saying to ourselves and our little brains inside our skull that we know what the market's going to do. We don't. We don't. And that's the most humbling experience you can ever have as a trader is that, you know what? The levels are there. I know what I'm doing at the levels. Makes sense. Let's do the resistance. We never planned it. So I like to look at the blues. Right? There are some blues here. But take a look. You say, well, look at this. That was 27.10. It stopped on a dime there, didn't it? Even though that's a put support level, it was above price, which can sometimes confuse traders. To me, I don't pay attention to those, right? I don't pay attention to those as much because yes, those could have been resistance, but I'm looking at the blues, guys, the blues. And that's where you can get a little bit confusing, right? We're coming into this level here. And should the 27 level be level of puts drop a lot if it does not hold this support? Should the 2700 level of puts drop a lot if it doesn't hold? Yeah, but I don't know how much. It may take time to update on the website. I'm not sure how fast they update that. And the point is, let's map these out first and let's get these on our chart so we understand what's going on here. 2750 is way too far. Like we're so far away. These strike prices are so far away that it's you know, I would go at 2720 is the bigger resistance. It's right here. It's not the biggest one, but it's at the edge of the standard deviation. 27, 30, and 35 is the next ones here. 30 and 35 is the next ones. Now, 2710 was here. There's a pretty big wall of puts, excuse me. And it's interesting, like they never, it's the market does what it does, right? Like you would think that it would get to 2720. It didn't, right? It just didn't, right? And that's fine, right? It could be because the indices are going up, right? It could be because of whatever, right? And we don't know that. Like nobody knows what's going to happen. Or they say, you know what? No, we're going to, yeah, okay, we know that the resistance is up here, but we're going to drive it back down to support maybe because we want to load up more. We have an intention of going long, right? We don't know these things. All we know is that take a look at this. It's just pushing through this area. Look at how it's just pushing through that area. We don't know what's going to happen there, but it's in the middle, right? It's in the middle. So the fact that it overshot that, okay, means they may be coming here or here. Like we overshot it by a lot, which tells me that they're going for a much larger rotation. And if this crosses in here, like this, if this comes up in here and crosses like this, it's support, right? It overshot it a little bit, right? And this could very well be the support that overshoots, right? It's the biggest support. But I tend to not trade support when it blows through the level like this. I like to trade support when it's showing me that it's respected. To me, this is failed support. The way I read it, your mind would want to say, okay, yeah, it's support. We overshot it. Sure. But did we really hold as support? And this is what I want to challenge you. I want to challenge you to think like, okay, like support normally tells me that it's holding. Does that look like it held? Didn't even react off of it. Didn't even have a bounce. Just blew right through the hedge, which means they're going for this, most likely. Okay. And so what I normally like to see is I like to see how the market responds on these areas. To me, I would want to see. This could very well be a great long. It overshot it. I personally think that when it overshoots like this, think about risk management, right? Your risk management, okay, is that if it gets stuck here and wants to come back down here, there's nothing wrong with trying that. This is a very valid attempt to a crossover trade. But the issue here is that it overshot it to me. Now, this is still, a lot of traders will trade this as support, right? We got a crossover. We enter the long here. Your stop goes here. For me, I like to see it happen at or on the level. To me, this is a little bit of a higher risk play here. I would rather to see if it's going to cross back down, to me personally, because I'm inside the middle and I haven't got to the extremes. So this is something that I've been doing a lot in terms of trend trading environments. I know, Jim, you've been trading trends a lot.
Yeah.
Because normally when you reverse on a level, it's going to hold a lot more stronger at that level right away. You're going to see it react at the level, right? And like if you look at the 2710 level, right? We didn't overshoot it. We stopped on it and got the cross. This overshot the level by a large amount, which normally means a lot of times they're going to come up, maybe sweep the stops a little bit, come back down, and then reverse, right? Like we don't know this. So for me personally, I would trade this to the short side because it failed to me. That's the way I read this. Does that make sense to you guys? Take a look. Oh, look what just happened. We overshot that level, right? That 2410 level. So if I come back in here and we get an opportunity to come in and cross, I'm going to take that long. Make sense? And we haven't looked at crude yet. So if I got a cross to the short side back down, I would look to short this. Win, lose, or draw, there's risk and reward for a reason. If you take a win, you take a win. You take a loss, you take a loss. But you have to be able to put on trades for a reason. So take a look at crude. We'll watch and see what happens here. See how it's starting to potentially come back down and cross down? If it crosses down in here, if it crosses down, I will drag this down. And I will take the short. I want to see it cross down and I want to take the short to the short side. We'll wait and see. And if it gives me a great trade, great. If it gives me a bad trade, it's nonetheless, it's a trade. I'll wait and see how it wants to respond. Take a look at crude oil. 71. We're on 71. Big resistance at 71.50. Wow, that's massive resistance at 71.50. Big one. The next one is at 72. Support's at 71. So if you think about where support is, the biggest orange here is 71 and 70. 71 is the biggest support. Look where they stopped it, right on 71. That's been the wall of the support. So 71's there, 72 is above us. Big one, yeah. These are the levels, and there's nothing till 70. So if we break below here, if we break below 71, we're going to 70. Which is a much bigger trend to the downside. You see that? There's nothing stopping price until we get to 71 or 70. So I would really like to see a rotation back out of here for crude here. And I think it just gave it to us, Agent. We came below support. We broke below it. And
yeah, it's breaking down.
Let's see here if it gives us a rotation down. So let's take a look at the strike prices here, if it can give us the follow through to the short side. We're at 71, 70, 80, 50. So take a look here. So it's breaking back down. We'll see if it rotates back down. We'll take a look at 70.8, 70.5. So there's a target here. Let's put a stop in here. And let's just take out, let's just do 2 and 2. 3 contracts here. 2 contracts here. I got a trade plan. Got a trade plan. These are strike prices that are coming down. And those are basically the locations of the next strikes. Make sense? I'm just using those strike prices as bounce plays. So you can take a look here. It is holding on that support for gold. I just don't like the way it rotated. I don't like the way it rotated out of there. Just basically, like, I would love to see it just curl back down. But it is the strongest support level on the gold side, right? So if they just overshot it because they have a ton of business to execute there, then so be it, right? It's we don't know that. We have no way if they're going to overshoot it or not, and all that fun stuff. Okay. And we'll see if oil wants to give us some love here and drop us down to those strikes. Right, 71 is their support, right? 71 is supposed to be support, right? But we overshot it, and we came back to retest it. So when you break through it and you come back to retest it and you rotate down, normally they're going to come and attack the lows and try to sweep lower. If we reject off of it, normally they're going to try to take liquidity below this, which tells me that normally tells I should get a little follow through at least to be able to peel off some profit. And that's kind of what I'm aiming for. Makes sense. Now for gold, I would love to see gold. Gold is at the 2,700. 27 was a massive level, but 27 to 2790 is a big region. You see this to this. So what they may do is they may just come to try to execute a lot of business between the levels here like this. You can see this. So that could be what's happening. We don't know this, but we have no way to assess that. We just can see the level. And therefore, if it comes up and it crosses back down, then that would be something that makes sense considering we overshot it. But, you know, it may be that this is the hold and they're going to hold here. And that may be the big rotation for the day. And it might be just a missed trade. And gold is you see how we never crossed back down? I would really love to see a crossover back down. If it crossed back down here, I will take that. Oh, what just happened here? It just got filled. Okay, took a profit. Let's adjust my stop. And I'm taking 2 contracts left over. Move into break even. Okay. There it is. So I took the first target off on the rotation like I was planning. It was a nice rotation of a failed short, turned resistance. And yeah, for the gold trade, I would love to see if it's going to rotate. Like, I won't take the long here because the long happened here. If you were going to play it, you would have played it right there. And it would have given you a profitable trade, but this is a decision you have to make. If this comes down here now and rotates now, that's a short. If it gets above us and then comes back down, no. If it crosses here now where we're sitting, the EMAs are on that area. Average price is on this. If it breaks back down, then I'm going to look to see if I can take a short here. Okay. That will give me an opportunity to play that to the short side. Does that make sense, guys? But if the EMAs break above and we start trading well above, then this is going to be, we're back above support, which right now this is still resistance to me. Make sense? You guys enjoying the morning? So there's the gold rotating down. I'm going to try to get a rotation here. Normally there I am short. So I'm short 5 contracts here. Now let's go in and let's talk about, let's put a stop in here because we don't know what's going to happen. Never know what's going to happen. Let's go to gold. Okay, I am now at 27. 27.95. Okay, 27.95 or 26.95, excuse me, is the first target. And then 26.90 is the next one. We're going to wait and see. Now it crossed over and it may hold there. It may not, right? And what happened? What happened there, Jim?
Like, I looked away for a second and it was exiting, so I don't know.
Take the timestamp of right now, just so we can go back and watch the replay.
Yeah.
I'm going to try to enter again. I'm going to try short again and try to reestablish that. And let's go down here. So I would look to trade this short and take a target here at, like, say 3 contracts down here at the lows. And then I would look to trade this all the way down here if we can get down to the next level, because that's the big strike. Make sense? So this is how you trade the levels on failed or retests or broken levels. I will always look to fade them at the strike prices. So 26.95. I'm front running that. 26.95 is down here. So I'm front running the low. 26.95 was where that strike hit. You see that? That was the middle strike. 26.95. So I'm going to put a target down back there to test that other strike, but I'm going to hold for the bigger target down here just so that I could ultimately try to capture the bigger play. You see here, I'm getting the runner on the crude oil trade. Let's wait and see if I can get a little bit of push on gold. And so right around 10 o'clock, Jim, that order just flattened my position. I'm not sure why, but
Yeah, got it.
you got the timestamp. We'll just give it back to John. I just want to see if there was some. I don't know if it was me that hit the flag. Did I move the chart and hit the flag or what? I don't know.
Might have.
I didn't lose any money, but
Yeah, we got 10 o'clock news, by the way.
Mhm.
Inflation sentiment, consumer sentiment, a couple things going on. Doesn't look like it's shaking things up too much, though.
Same thing happened to you on GC at the same time, Howard. Wow, we're tied. We're assessed. You know, we're so. You know, we'll wait and see what's going to happen here on gold, right? Like gold is, you know, if you think about where we're at, we're stuck between these two walls right now, right? And 26.95 is the strike that is in front of this at 26.90. The big strike is down here at 26.90. If they're going to rotate out of this, they overshot it, came back as resistance, which makes sense for us to try to trade it back down. If it fails, we have no control over this, guys. We'd have no idea. We don't know what's going to happen, but we know we have a trade plan in place. We've got stops in place. We've got targets for a reason in place. All we need to do is wait and see what the market's going to do. Jesus, I missed the Russell trade. Can't catch them all. Can't catch them all, and I'm fine with it. I'll wait for it. Leave it be. Too much is too much for the brain to handle. Like it's how many trades need to be in at one time? Like there was the trade, came right in, crossed over, right? And this may hold as support. You never know if this becomes the higher low, which it may look like it is. It may be the support that they're going to hold for the day. It may not. We don't know this. But the rotation below gave us a reason to attempt a short back down to the lows. And yeah, I mean, the risk reward on the trade is great. The overall plan makes sense. The data is from institutional levels. And if it just holds as the support level for the day, well, then we have no way to know that. And that is the biggest support level for the day. Failed support becomes new resistance. So if the new resistance doesn't hold, you know, could be a chop zone for a while for all we know. We have no idea. Mm-hmm. Now, take a look. This would have been a stop out if you took it. Realistically, if you played the trend, right? If you played the trend here and you put your stop below the low, you would have had a stop, right? We talked about the trade plan around this area, right? But we came close to the next target area. So it's, you know, when I look at these, it's okay. You have to play one versus the other. You have to make a decision. And if you didn't want to trade the trend to the long side, then you trade the longs down here on the reversal, right? Like we talked
Reacting
about.
off the news there anyway.
Yeah. And a lot of people
That's
may not
what's
have
going on.
taken this trade because of the news, which I'm in on gold, and not taken this here. Like Jim said, the news relations, right? I was already in crude 10 minutes before I took a target and took risk off the table, which is the key, as I had risk off the table going into that news. I'm going to trail my stop below the 13 period. You know, just that way I don't give back too much. Look at gold. Let's go gold, right? Look at gold. Doing pretty good here, guys. Let's see if gold's going to try to take down that strike. I don't have it at the low. I have it before the low, right? I have it before the low. 5 ticks before the strike price. Let's try to do this here. Striker trading in action. Took my target. I don't like mucking around with it. And everybody says all they do is fucking build software, eh, Jim? You know, I remember people in the Discord,
even do that, guys.
people in the Discord, oh, Sean's just a salesman. He don't know anything about fucking trading. I don't know what that is, Jim, but I'm going to take a screenshot of that because that's some weird situations up here. That was the slippage on the news, maybe. Gold might come back and tag the stop, but I got a nice target on the first target. 60% off at T1. Looks like a seagull. Look at the crude oil trade coming down to hit that larger strike.
Seems like the markets are kind of responding a little bit later off the news today. Took a little bit for them to really kind of start moving.
It was a great trade on crude, right? And it was a great trade on gold, right? Hit target on crude. I'm not a genius. I just spend a lot of time looking at stuff that is completely different than I used to do my entire life as a trader. Now, we all feel like $1 million because that trade worked, right? But if you took the trade on the Russell, you would have got stopped. You got to remember that trading is not about being right all the time. It's about understanding what we're doing on these levels and why, right? Like a lot of people will always be naturally wanting to fade the reversal. It only matters as a reversal if you respect the level at the time of respecting it. Remember, I like to fade reversals at the extremes. Therefore, I look for failed levels to trade the trends out to the extremes. Okay, so let me repeat that. For a long period of time, my brain would always want to be contrarian to nature and that I'm always wanting to fade the reversal. That there's nothing wrong with that. Nothing wrong with that, right? But, okay, with that comes an understanding of how the market responds at these levels, right? And most of the time, okay, the market's going to want to trade to the extremes and then back into the range, right? With the exception of very tight markets. And it's exactly what we're seeing here on oil is that, yes, these were support levels, but the big reversals are going to be at the edges of the extremes. Okay. So that's why I traded that short, because it came through it, came back up to it, and therefore I would love to short it back down to the extremes. Look at the gold trade. I don't like to hug the EMA too close because like it's a 13 period EMA. It's not a big EMA, right? Now this is the support level, right? There's support here. So I'm going to have my stop slightly above it. Remember what I said, if the biggest level fails, it's normally going to be the retest location for them to test the strike to the extremes. And this is how you catch the big moves of the day, guys. And this is how you decide whether you want to be, listening to the things I'm saying or challenging the things I'm saying. I had guys in the webinar yesterday call me an idiot. I said, all right, no problem. Can't help people like that. Now, if this crossed back up, I would close the position because I don't trade when the market stops. But if you look at the picture, $26.95, we shot it. So this is now going to be slight resistance. This will be $26.90. Okay, so $26.95 was here. This is the strike price, which it's hitting right now as resistance, which means my stop loss should be above it with the expectation that's going to come back down and hit the bigger strike. Oh, his CEO rebooked, Steve. Yeah, his CEO rebooked with me. Yeah, they're busy people. But let's just wait and see what happens here. And I'm going to take a screenshot of that. I think it's worth it. I think it's worth showing the screenshot. Don't you guys? Come on, gold. Let's give me a big one. Let's rock it. Closing. Don't want to give it back. Ending that. I don't need it to go all the way for me to feel good about that trade. Do you see what I just did? I don't care if it gives me the full target. That was a big trade. Do you see, once it starts reacting, we're close to this, guys. We were close to this, which means I don't need it to hit it to have a lot of money in the bank. Yeah, like this. And it could very well, I could have made an extra $500 or I could give back the five. Do you understand the difference between discipline? That's a discipline decision. That's experience right there. Yeah. You know, that's experience right there, eh, Jim? Just fuck it. I'm out. Take the money and run. You're in an environment you have no control over. The only thing you can control is your decision in the environment. And that was a good decision.
I'm still in it.
Fuck you, Jim. All right. Okay, let's go in here. Take a look at this. How did that end up playing? Okay. Yeah, and the reason that shows that, just so you guys understand what happened there, was that's not accurate. I'll tell you why. Because for some reason, the software closed my position up here, which was a bug. So that's not the accurate trade. So right, that was a pretty good trade. And take a look at the oil trade. Like, you know, the oil trade really did produce. It's going down to the 70 level. Why? It's the biggest call option or put option, excuse me, for the day at the extremes. So if they're going to trend it, they're going to trend it here. And I just took profits along the way. You know, if I had more contracts, I could have peeled out more. So are you guys happy with what we've done this morning? There's a lot of information that's going to be in the members area here that talks a lot about stuff like today was more live trading. I wanted to have live trading and I wanted to show you what we're doing. Go back and watch all these videos, please. You need to see them all because there's a lot of different information in here. When do the levels manually, do we add gamma? Gamma is great if you want to add it. I personally just tend to just try to simplify my life and look at open interest. Gamma can definitely give it can be very advantageous to the levels. So I'll give you an example. If I'm looking at this from, this was the gold, right? This was gold. So what I can do is I can say this is gold. Okay, then I can come in here to futures open interest. I can come here to open interest here on the heat map. And then what I can do is I can go down here to gamma, hit the 0 DTE option, hit the, there, it's weird how it does that. Gamma. You see the gamma here? So I'm going to take a screenshot of this. And I'm going to now upload that into ChatGPT. Here is the gamma information for this market as well. Please combine the gamma with the open interest and then provide the best support and resistance based on open interest plus gamma. And oh, I forgot to upload it. And here is the picture. Copy. Yeah, so based off the gamma analysis, strongest resistance is 2750 and strongest support is 27. And if support failed because that squeezed them out, guess why that was such a huge short? Because support failed and it was the strongest support based on open interest in gamma. So gamma just normally talks about the squeeze effect on what happens if a position, if you get caught in the hedges and they can't exit their positions. That's exactly what happened here is the hedge failed and it was the biggest hedge for the day. What you look for, and this can be a part of the strategy in and of itself, and this is really, really valuable to think like this, is let's say I'm looking at, let's say I'm looking at these areas on gold, okay? Let's go to gold. And if you look at, that's oil. So let's go to gold. Okay. And if you look at the biggest level and it's in the middle of the range, right? I really like to think about like when it fails, because if you think about it, like, is this really where like big reversals are supposed to happen? Like, think about that. Like if I'm here and the big reversals are supposed to happen out here, what I really want to watch is when these fail. Think about that for a second. Like really think about that. If I know that current price is here and this failed to be resistance, where are they going? Same thing here. If I know that this is a big level of support and it failed to be support and we're in the middle, where are they going? Totally different way of thinking about the market. Most people think, oh, support below price, resistance above price, reversal. Where are you trading this information? Make sense, guys? That's the key for the day. That's the golden nugget. Look it. Came back down, exited. Jim, did you get out of that trade?
Yeah, I just got out just now.
Good.
Yeah.
Does this make sense to you guys? Like, let's take a look here. Yeah, the indices are a bit messy, but like, think about the indices, okay? Like the indices, if I look at Russell, okay, this really isn't big information to me. 2370 is down here. 2370 and 75. This stuff is, this over here is much bigger, and we're not doing anything. We're sitting here diddling in the middle. So, just Friday price action, right? I believe, like, take a look. We come back above it. This is news. Remember, this is news. So we got back above it, and here's another opportunity to trade, right? We're back above it, and it's coming. You could take another attempt on this. Should you want to try trading to the extremes, there's nothing wrong with trying to take a second attempt once we got back above it, because this is the strike price that was held here. And this is where you could actually go long in here, tight stop with the target. There, by nature, the market has to try to go to the extremes. This failed. This is resistance that's failed. Makes sense? So this is an actual potential long trade here if you were trading the indices to go back up here for a T1 and a T2. Okay. So Jim, I'm going to pass the torch over to you guys now.
Mm-hmm.
And, I think I've done my part, guys. I'm going to close this stuff out and give it to Jim. Jim's a very good trader. And, anybody in here want to come and work with us on the educational side? Anybody here a great trader that's got you have your real, if you're good or not, like, be honest, right? We're hiring another educator. We're bringing in another instructor for futures and add to the team. And we are looking for top talent that can trade like Jim and I, that know how to break down the markets like Jim and I, and how to explain things and educate things. We're going to be putting out a job description, and you can't just be information people. You need to know how to communicate, know how to, talk on the mic, know how to talk through trades and assess the markets and be able to improvise on the fly. We always hire from within, from our top traders first. And if anybody in here feels that they possess those skills, reach out to Jim and I. Let me know. Would love to, entertain that discussion. Right. So you guys can, let me know. Right. We've been wanting to have a conversation with them, or if you know somebody, right. Right.
Lance. It's funny.
Lance. Yeah. Thanks for the morning. Yeah, exactly. All right, guys. Anyways, guys, have a fantastic day. I hope you enjoy the striker. We'll be doing more of these in the future. And Jim, I'm going to make you the host, brother.
Cool.
Appreciate you letting me work through any kinks in the platform here this morning, guys. Look at Jim crushing it.
Yeah, I had a couple trades on. Took a long here on crude oil before you guys started taking trades. I put one on there, got target one, and then trailed back to T1. And then this guy here, short there, and then stop a little bit better than 1-to-1 on that one. So we'll take it. Couple things cooking. So we got some levels.
Yes, David, we are interested. If you know a good trader, if you know a good educator, and yeah, David, not a problem. We can work things out. Let me know. Ping me.
There we go. All right, cool. So, RTY, we've got a couple levels on that one. Just is not much happening there on that market. 2,700, we've already traded it once. Do we need to trade it again? No. We've already been there, done that. We're not trying to keep going back. Eventually the well's going to run dry. So we've already traded that one. 2690 was decent support. Never really did quite make it. Fun fact. The market went one tick away from my target and then turned the other way. So Um, so whatever, that's what they do. It's all good. But yeah, so really not interested in that level. Resistance wise, I'm really not seeing much on the gold side. And let's pull it up. So you see how this is all, these are all puts, which is technically support. Yeah, I am. That's what I do. Um, so these are all support. And so it's kind of a confused state, right? And you've got support here and here and there. And so we can, make sure those levels are on the chart. Whoops. We've got 2690. Let's see, 75 and 70. So we've got 75. We can add 70 in here. Um, but what'll happen then is if we go deeper, then we can potentially trade this short at 2690 coming back in. Cool. Let's check on, crude again, not a whole lot happening here. We've got the 7150 and 71, pretty decent resistance there. 7150, 71. I've got 7180. That was a level that's kind of gone now. 72. Support wise, a little bit at 70, but notice what's happening on the volatility. So this is spiking majorly as we start getting down into that 70, even though there's not a lot of open interest there yet. You've got a pretty big pain point. This is kind of like, how painful is it that the market keeps going down there? And so anyway, so you might see that might start to spike some of these in here. We'll see. We can kind of zoom over and see that, yeah, 70 is the largest compared to these little blips in here, but I don't know. We'll have to see how it plays out. And then there's RTY, which we got 24.25 is clearly the level, and 23.70. Here's what I notice about RTY versus the other markets. This one, they really tend to hold those levels. There's like one massive level or maybe two, and that's about it. And but those levels really hold. So those can be pretty fun. You can get some really great trades on those. And then NQ, you're really looking for the spikes, 300, 400. That's kind of what I'm looking at here. And we haven't gotten up there yet. So on the support side, 200, but that's already getting run over. I wouldn't even consider anything until we start getting into this next deviation, right? So 100 and below would be things that I'd want to pay attention to. And then you've got 50 and 21,000 even. Oh, we already just plotted that one. Yeah, that's good. 20,100 is a little bit of something there, 50. So if you're an NQ trader, you can kind of watch those levels, but that's what we got going on. Friday, we've got a holiday Monday, Veterans Day. So I think the markets are open, if I'm not mistaken. Anybody know? Futures. The bond market will be closed. Stock market will be open. Let me go to the schedule here. Yeah. No, Veterans Day, we're still there. Might be a little slower, but we'll still be in there. So cool. Could very well see some resistance here on gold again, but like I say, been there, done that. Level's already been traded. I don't need to trade it again. So going back to this for a second. So we'll kind of park here because we get get questions around, well, how do I know which levels to plot and things like that. Here's the come up with a plan that works for you, obviously. But here's my thoughts on it, right? Is like, what are the top 3 levels currently for support? The puts. Well, we've got 2700, 2690, 2670. But we're already at 2700 and we're already below it. So I'm going to focus on this one, and this one. Those are my 3 top, right? On the resistance side, you've got 2690, 2700, 2730. The largest is 2700, which is right where we're at. Now we've already traded it, so I don't need to trade it again. But does that mean that you can't get a trade there? Absolutely not. There's probably some really great trade opportunity there. There's some other things that factor as well that are contributing to this. So if you decided to take something here, by all means, there's an opportunity there and you can short in here. What I would want to see is that if this was a little bit lower, let's say like within 2701, and then this level gets swept out and then they bring it back down. You see how the EMAs are starting to taper and they're starting to go sideways and then they're starting to slope back up. That's a sign to me that momentum is starting to shift. It's a really deep pullback into an area that we've already traded. Again, that doesn't mean it's not going to react. It's just, I would want to see something very, very clear there telling me to get short if I was going to do that. So. Cool. So while we're, kind of waiting for things to come together for us, what questions do you guys have that haven't been answered yet? I do want to show the deliverables section again. This you will all have access to once you log in, and you'll be able to see all this. You've got live trade room days, and then we've done 2 additional AMAs. What I would suggest is watch this one here. Yes. Yeah, watch. Maybe it was this one. These 2 anyway will have a lot of info. Might be on this one. Have a lot of info on the whole process, start to finish. You'll get a lot of good info out of those. So I think watching these 2, you'll have a pretty good idea of what we're doing in here, and that'll give you all the details you need. But yeah, so all of your entries, options, we go through these in these AMAs here. So you'll want to watch those so you can go through the PDFs, understand how they work. There's some templates in here. And then if you haven't already, what you want to do, this is in the other AMA as well, but if you look up Quick Strike in Google, okay, and just click there. I know it's kind of hard to find, so that's why I'm showing this. This is the information. What you want to do is click register. And now I'm already logged in and registered, so it's obviously not going to let me do that, but that's how you get access in there. So it's free, as mentioned. So definitely do that. Yeah, this is all in the other AMAs, and then we record everything. So yes, this is in the AMA. We'll have this in the members area as well as soon as the recording is available for us. We will be holding these regularly, yeah, as far as I know. Cheat sheet for language, yes, it's in the deliverables. Yeah, everything's in there. So it's the AI one. That's where the language is for the prompts. As of right now, that is the story, yes. There goes gold, pushing down. I don't see any issue with that, Lance, if that's what you want to do. Yeah. Wait, the workspace is in the resources for Tick Blaze, but wait until the next build because I'm gonna build another one out. So I would just wait at this point. I don't think the one that's in there will actually work. Gold struggling a little bit, struggling to get that push. I'm not convinced. Equities are kind of stuck today, not really doing much movement, kind of whipping around a little bit. Might be. Now that they broke the low on this wick, we'll see how far they want to take it. Are they going to catch some support here at the 95 level? Are they going to bring it down to here? Still respecting that level, though. Nice. Look at how crude totally flattened out there. That is interesting. We have resistance at 71. So I go back to our map here. 71, some decent resistance, 71.50. Now these open interest levels, they shift throughout the day. And they do change pretty regularly. So good to keep an eye on those and make sure you've got fresh data to work with. The gammas don't really update throughout the day. They only update once a day. So as far as I've seen, but these update as you go. So always good to have fresh info and insight. Right now we're about here, 70.50. So not quite there to 71, but remember I was saying, as we get down closer to that 70, you start to see that volatility and pain start to spike. And you could see things kind of start to shift. Now here's where we're at, 70.50 just now, getting into the EMAs. We've been looking right around here at 71. 71 would be a good area to look at going back to the downside. Yeah, I like to update the open interest about every 30 minutes. Or as we get closer to a level that, we're interested in trading, then I'll do a quick update as we come into the level, just to double check where we're at. Yeah, just click refresh on your browser. One thing that you'll really want to go through as well is looking at the entry patterns. And one of them that I'm going to show you while we're at it, just because this is one that is kind of my special way of doing it. You'll see this in one of the other AMAs as well. But the way that I like to enter these is when we see the candle flip from red to green or red to blue in this case. But let's say we're coming into the level 71. And so we're right in here, right? So we dipped right to the level. We've already tested it once, but we're coming back in. Now, mind you, it's 8:38. So time is a factor here as well. The pit open is not until 9 o'clock. So I've got a little bit of time in there to get a trade on before the pit opens. And in this case, we had red to green or blue in this case. I'm also looking for increasing volume on the bearish bar to decreasing volume on the bullish bar. The decreasing volume is my signal to get long, and there's the entry. And then I ride that up. So the way that I do this is this is a 10 tick range bar. So I just go 20 ticks on the stop, 20 ticks on target 1, and then wherever I need to move target 2 based on what the market's doing. But that's the signal. Increasing volume, decreasing volume, red to green. If we were up here, we'd be increasing volume, decreasing volume, blue to red. And that's the signal going the other way. And why decreasing volume, right? It sounds so counterintuitive. It is. It is counterintuitive, isn't it? We always hear that increasing volume, big volume is what moves the market, right? Okay, so let's think about this for a second. What does this increased buying tell us? On this bullish bar, on a range bar, we've got big volume on that range bar going north. Why would we have that? What does that tell the story behind what's happening there? So what is happening? Who can tell me? An increasing volume. Going sideways. Kinda. To a certain extent, absorbing. Yeah, exactly. Took too long. They're building volume. It's a lot of volume for a little move, right? Think of it as each of these bars is the same range from high to low, right? So if the volume is higher on a bar, most likely, not always, but most likely what that means is this bar took longer to close. In other words, the market stayed inside of that range for a period of time. On a smaller time frame chart, we would look at this and it would look, like this, which is what? Accumulation, distribution, whatever you want to call it. It's a slowing of the market. Now, why would the market slow there? That's the next question, right? Why would the market stall out there? What's happening there? So let's go even deeper into this concept. If the market is slowing down, there's less momentum, yes, but why? What's happening here? We just swept out this high, which is very important. The buying is what at this level? What type of buying is that? It's aggressive. Why is it aggressive? Because those are market orders. Why are they market orders? Because those are stops, and stops are market orders. So if the stops are getting triggered, and even in spite of that, you've got heavy buying at the highs, but then the market turns the other way quickly, slowly, quickly. Look at the drastic difference in volume there. So that's my sign that I'm probably not getting any further on this trade. And time to move the stop if I hadn't already, and just look at getting out of that trade. Now, I could have just taken profit, but I just used the trail stop because I don't pretend to know just because I'm getting my signal that, oh my gosh, the market's definitely turning. I don't know that. Trade the reaction, right? Don't trade the signal, trade the reaction. So that's the idea behind this. Heavy volume means absorption. So the steps that we do this, and this is how I trade order flow as well. Aggression into absorption. I'm just going to do ASB for absorption. Into the signal, and then reaction. So this is how I trade order flow. So what do we have here? Aggressive buying met with absorption. What's absorption? Sellers taking the other side of those positions. For every buyer, there has to be a seller. If the market's not moving, what does that mean? Buyers equal the same as sellers. So if there are equal amount of sellers and those sellers were able to drive the market down fast, then that's a pretty relevant signal that you're going to get some follow through. Usually, not always. No such thing as a sure thing in trading. but you're going to get some pretty decent response out of those. So that's why that signal works. It's kind of taking order flow concepts without actually having order flow on the chart. Why is the volume equal on volume bars? Now there's a question. So I did this in one of the other AMAs as well. We got time, so I'll go over this. On time-based bars, minute, right? We'll just call those minute bars. What are the variables? Volume and range. On range bars, what are the variables? Not range, obviously, time and volume. On volume-based bars, what are the variables? Range and time. So if we know that time and volume tend to kind of run together, not always, but a lot of times heavier the volume, heavier the time. If you look at a volume profile versus market profile, volume profile is volume and market profile is time. How much time did it spend at that location? So if we know that the volume is pretty low, then the time should be also, in theory, pretty low. If the time is low, then that means speed. Low volume, speed. Low volume, speed. It's speeding up. Any of these low volumes, that's speed in the market. What's happening here is they're moving quick range. Why? Because we have news coming at 10 o'clock. They're also at the lows. They came down, swept that low. What happened? Quick move. They fought for a while in here. Quick move, seamless up, went up, down, up, down. It is chop. These bars ended up filling in pretty quickly. So that means you've got quick chop. Quick up, quick down, quick up, quick down. Then they start to kind of slow down, pump the brakes a little bit here, and then slam it down. This is our sign. Okay, we're going to break. Tiny little volume, starts to increase. What happens? Pullback. Decreasing volume, slam it down. Tell the story about why the market is moving the way that it is. It'll help you understand what's going on. It'll help a lot. Now we're just stalled. Price is not moving because we're just bar up, bar down. Some pretty heavy volume trying to get, trying to push up, but they're meeting sellers in that case. So anyway, that's why that signal works. That is what I prefer. So let's go into gold and look at this one. So what do we have here? We have increasing buying, decreasing selling. Is that the signal? No. I want increasing buying to decreasing volume on the selling. Yeah, this is only using range bars, correct. Bear with me 1 second. Cool. All right, so let's look at this in here. So didn't get a signal here. So where do we have increased buying, decreased selling? We have it right here, but is that where we want to sell? No, not really. Like we're back down. We're trading back into the chop down here off of support. And the market comes back up, increasing volume to decreasing on the selling. Technically, that's where the signal is. Right here. And that would be the trade. Now, in this case, the way that I entered this one, I did not enter here, although I could have. Would have been a great trade. But what I did is I entered on the volume chart because I didn't see the signal I was looking for here, but I got an engulfing sort of bar here. This is kind of like I don't know, hammer or shooting star, whatever they call them. A little bit of a pin bar type of look, and then we got the break closed down. But I don't want to trade way down here. I want to wait for it to come back up. So it came back up here, came back down, pushed back down. What I'm looking at is this tiny little fair value gap here. We got that tiny little fair value gap. I'm looking for them to fill that in. As soon as that filled in, I took the trade. So that's what I was trading there on that. Now that's a little bit more advanced. You can just go, we see we close down, close below the low. It's a strong move down, giddy up. Let's go. Take the trade right there. Still got almost 2-1 out of that trade. So nothing wrong with that. Simplify it. I was just looking for a better entry, and that was my theory behind why I did that. So good. So let's go back here again, and let's look at what happened when it came back to 2,700. So we're looking for, in the volume, increased buying to decrease selling right there. So there's the signal. There's the move. It's like the simplest signal, but it works. Now, it doesn't work all the time. Nothing does. But if you set your risk correctly, you honor your stops. When it doesn't go, it doesn't go. But if you pair this up with trading at areas of interest, aka striker levels, on the right side of the market, you can do very, very well, as long as you're not trading on election week. No. There was some wacky trading there for a bit. It was getting kind of weird. And I think we've kind of settled back into some normalcy in trading, which is hallelujah, because it was getting a little weird there for a while. Yeah, there's no such thing, right? That's for sure. We're kind of stuck in the middle. We really don't have much going on. I'm probably going to wrap up this session here and we'll call it a day. Does anybody have any last questions before we finish up? Fill in fair value gaps. I screwed up many good setups. Yeah, it's for me, it was like I wasn't worried about it, obviously, wrecking everything. But no, I just was looking for a better entry on that one. So that was my excuse. Sick plays have a chase option like Ninja. Yeah, you certainly can. You can do anything with the management scripts on the trade management stuff. So yeah, I mean, you can pretty much do whatever you want with them, which is great. Just have to program it. GC 2,700, higher puts and lower calls. Let's look at it. Yeah, we got more support than resistance, right? At this point. But we're below 2,700. So if there's more buying, which is on a hedging type, these are puts. So technically it's selling, but we're looking at hedging here. So we do still have the highest amount of resistance here, though. So this is kind of confusing. So what do you do in that case? What does the volatility look like? Volatility looks like there's buying all in here because there's pain points in there, which is why it's kind of bouncing around. Here's my thinking here. Anything where you see like this, I kind of expect it to be like a magnet and for them to have to fight over who's going to win. That's the way that I look at it. And so it held up. It definitely held up, but it's confusing. And if it's confusing, I'm not interested in trading it. I want to see clean, simple entries. That's what gets you paid. It's not trying to figure out, well, what are they doing here and what are they going to do there? Just trade the obvious ones. And if you're in a trending environment like we were here, and if that was still the case, right? Like if we were coming into there, we had more puts, that's to be expected because they're looking to buy that level. Well, they got shot through, and so we traded as resistance. That's the exception, is if you're in a trending market environment and you want to look at trading it that way. So 5 seconds, any suggestion, small time base? No, I think it'd be way too noisy. for this type of setup. Yeah, way too noisy. You could use a really small time frame chart and use an EMA cross. That would be perfectly valid and relevant. If that's what you like. But the 5-second charts, you try putting that on NASDAQ right now, you're going to have trouble. They're working through some bugs on that. It's the NQ data is pretty slow. So they've got to work through that. So I wouldn't really look at doing it on that market, but the other ones, maybe, yeah. Cool. All right, guys. Have a really great weekend. Placing we had deliverables and stuff. EMAs, yes. In the entries sheet, there's some stuff about EMAs in there. So take a look at that. Yeah. Cool deal. I will say my flavor of entry is not in the cheat sheets because it's a little bit more complex, and I didn't want to throw that right out when everybody's trying to learn striker levels and everything else. So this is the way that we traded in the trade room. I like the faster entry. If the market's going to hold, it's going to hold. I'm going to take probably some more stop outs potentially, but I get huge trades on the ones that run. So that makes up for it in the long run. So you just have to kind of know how you're trading these. So it's not in Discord, no, not in Discord. Now it'd be in the AMA, and then we just covered it again. So there you go. All right, guys, have a great weekend. Catch you back on Monday. We'll see you in the trade room. Take care, everybody. Adios.